The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil. I'm on, okay. I'm on. I'm not sure whether I'm on. I'm on the... all right. We're on, and I'm not sure if it's on the microphone. Sorry, every once in a while. Oh, on the phone. Okay. We're on the phone. So let me just run that again. Sorry about that. Occasionally, I wonder what happened there, because everything was set up so beautifully. All right, doesn't matter. Technically, sometimes these things happen, so it was probably my side. So let me just run this again. We've got on the 2nd, in the morning, 8:30 in the a.m., this is Eastern Time, the jobs report comes out. Very big decline. 18 to 20 points in the S&P. Dow's 160 points down. Last night, a follow-through to the downside. 17 points on the S&P. Another 100 and something, 40 points or so on the Dow. The Dow cash and the S&P cash didn't know a thing about it. What happened was the Dow opened down this morning and is now up 107 points at 17,870. The S&P opened down sharply and now is up 13 points at 2080. To me, there are two things that are going on. We've got a very mixed market at this particular point. But mixed market in the sense that there are some things that are working and holding the market up, but there are other areas that are really not participating very well on the upside. Oh, there might be, some of the stocks might be up 60 or 70%, but these are stocks that normally at a point like this, with the Dow up 100, S&P up 13, they'd be up $1.50 to $2. That's telling me that there's a rotation going on, number one. Number two, it's a very selective market. And number three, the lack of buying intensity that we can see in the VIX index, the volatility index. Let me now just jump to the VIX for a moment, one-handed. Go like that, and I'll go VIX.X. And that says at 1473, it's still higher than the recent lows in the 12s, but it is not participating as an indicator to tell us that the buying intensity, because it's up 7 cents right now, 14.74, that the buying intensity is sustainable, not at the moment, but it's also not saying that the selling intensity is sustainable if it's going to not rally into the 16s. Now, if I'm looking at the history of the volatility index, and I spent a lot of time this weekend. I sent a lot of charts out to my subscribers for my opening call. And one of the things that I did is I showed this particular chart and I discussed it in detail. But I'm going to just sum it up real quickly. The 9-period exponential moving average, where the VIX was sitting just underneath last week when it closed at 1467, and I think it was at 1482, maybe 1460 something, was the volatility index, the 9-period exponential moving average of the weekly chart. And it said to me that the histogram, these little vertical lines, are starting to move higher. Usually that gives you a sense that it's working its way towards the 0% line. Right now it's at minus 0.32. And at the same time, the VIX index was not showing strength, but it was also not showing weakness because it was hugging just underneath the 20% line. And right now it's at 17 or maybe 18%. And it has crossed positive today, but this is the start of the week. The weekly chart, we're talking not even 2 hours into the week, so we can't discuss it as if it's a fait accompli. It is just right now. So let me quickly sum up what I'm looking at. I'm looking at a market that is vulnerable. You saw that in the futures. I'm looking at a market that's also seeing rotational buying. Look at this, GIS. GIS is General Mills. Leg D at an all-time high today. Leg D in the daily, leg D in the weekly, and only leg C, as I read it, in the monthly chart with that pattern that I've got in my CD introducing the Chapman wave methodology. It's called the 1, 2, 3 buy signal, buy mode, which then goes to a major sell mode. And that suggests that there should be a leg D, at least, in the monthly chart of General Mills. And at some point, it's going to give a huge sell signal. And that sell signal is going to come right back to this whole area between 50 and 48. And right now, it's at 57.06. So these are things that still have to play out. That's number one. But even more important at this particular moment, what I'm looking at is that the rotation itself is suggesting to me that we've got to look at the areas that were the very best. One is the XLV, which the XLV is trading at 72.14, up 15 cents. Just a little blip to the upside, having made a high of 76.01, an all-time high, in a right arm extension, move to the upside in the daily. That was, wait a minute, that's a G. That should not be G. That should be a B. That's very interesting. Well, it's a right arm extension. Whatever the wave count, I have to recount that. But in the meantime, it's pulling back, and it's saying a peak D in the weekly, a leg E in the monthly with a whole month to go. But the S&P Select Healthcare Spider Fund, I'm watching it really closely. The technicals are failing in the daily and the weekly, and it's suggesting that particular sector is finally has been under distribution for the past month, and finally we're starting to see weakness there. Question, would I look at the OIH? Absolutely. The OIH is very interesting. It's in leg D right now, and this is the, it's called the Market Vectors Oil Service ETF. Made a peak F in the Chapman wave right at the top in July of 2014, 58.01. That 01, interesting. If it was 58 round number, that would have been even more interesting. Comes down very quickly in a leg A, pops up. One month it pops up, and then it comes back, takes out the low, makes a lower low. Now, this is going to be very interesting because bull phases sometimes occur in a very sharp move down that only has a trough A and a trough B. But this is the oil service. And if you try to put it together to, and I'm going to speak to this issue right now. I had a number of emails over the past week, I think it is. Yeah, it's about a week. Talking about the new skyscraper planned in Saudi Arabia and Jeddah. And it's called the Kingdom, what is it, something Kingdom, I'll find it in a minute. However, what's even more spectacular about this, it is, here it is. It is the Saudi Arabia's Kingdom Tower. And there's an article about it saying the pointless hubris of a decadent tyranny. I'm not really going there at all at this particular point. That's not the purpose of mentioning it. Mentioning it is that my suspicion is that oil could be under major, major pressure over the coming year and a half to 2 years. Why? Because the world's tallest building, it is double the size of the World Trade Center, the tower that was just completed, and it is and it's a spectacular-looking building, but there's a certain, I guess you can call it hubris right now. I'm going to call it, it's an icon to man's ego. And I'm talking aesthetically, it is a fantastic building. Timing-wise, it would not surprise me if we're going to see oil under tremendous pressure over the next year or two, even though a lot of people are saying, hey, oil, we'll never get rid of oil. I think there's a lot of oil out there. I think that there's enough oil to keep prices fairly low, even though they're going to be bounces. So the OIH right now is actually... Most importantly, the OIH represents the oil companies. And in this particular instance, these are the service companies. It's in leg D in the daily, but it's only leg B, subordinate to the previous high of 36.90 made the week of the 20th of February. So it's a 35.14 up 85 cents. Very nice move. I suspect this move could continue. We should be able to make in the weekly charts, we should be able to make the H pattern that goes to the M pattern. I'll be right back. Basil Chapman, Tiger Technicians Hour. Got our first break coming up. Let's take your calls, and I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Ignition Hour. Dow's down up 96. S&P's up 12. Hey, look at this. Boston Globe Magazine section. You remember, I've been talking about this. It's not a year. It's not 2 years. Not 3 years. Not 4 years. Not 5 years. It's maybe 6 or 7 years. But I made a big deal about it last year. I made a big deal about it actually about 3 years ago, then again last year, and then most of this year I've been speaking about it. Now there's an article in the Globe. It's an article written by Peter Mandel. It says, how did colleges become country clubs? Remember, especially here in Massachusetts, you always get it from these guys. You've got one of the politicians talking about student loans. I'm going to mention not the name, but I'll say that she has been talking about this as if this is the next big thing that we're going to deal with, and we're going to fund all the loans. We're going to somehow get it out of the way. Well, isn't the real issue, how did colleges become country clubs? Not as perceptive an article as I would have liked. It's almost as if he was embarrassed to be talking about it. He went to Middlebury College, I think it was Middlebury, and whatever it was back in the 70s. And now, before you just got some slop put onto your plate and you had it and you thought, great, I got a little bit of lunch. And now you've got the vegan this and you've got the gourmet that, you've got the fondue, you've got the pho, you've got water parks, you've got flat screen cardio workouts, you've got all the stuff. And what about the education? Has education gone up tenfold? Has the quality of education gone up tenfold? I bet, in fact, it's gone down. So that's the issue.
the expenses. But you know what? It's a competition. And if they don't go with the next best thing, they feel they're not going to get the students. So you've got your X number of students. They're not going to increase the student body by all that much. UMass Amherst is rated one of the highest schools in the country for its food. UMass, University of Massachusetts in Amherst, top of the food. Who cares? When topping, standard. I believe they have improved the standard, but really that much? So this is a great article. So if you want to read it, it's the Boston Globe magazine. I put in a link over here. Yeah, I'll put the link in. It's all you have to do is bostonglobe.com magazine, or you don't even have to do that. All you have to put in is how did colleges become country clubs, and it'll get that article. I think it's worth reading. It's nicely written. I would have, this is just my own opinion, of course, I would have done some other things. Not the issue. The issue is it was brought up. Thank goodness somebody brought it up as it's in the magazine section. It should have been the front page of the Boston Globe. All right. So what we've got here is the OIH is rallying quite nicely. That means crude oil. During the break, I didn't have a chance. We were just getting ourselves back into the swing of my headset setup. Right, so the crude oil is acting very well. I think it will take out the 52.48 high of the 26, and I'll just draw it in right now. My suspicion is that we've got ourselves another arch. This could be a bigger one, but it's an arch pattern. Nevertheless, we'll come back to test. And you know what? I'm still of the opinion that crude oil, here's the chart, look at this, is making a 1-to-1 to the downside. Yep, there could be blips going up in the interim period, but at some point we will be down in the 30s. We'll see what happens. Trading right now at 51.45, can go to 56, maybe even 58. We'll see. Okay, 63.70 is the monthly strong resistance. And that's also the breakout. Remember the breakout of the low of 60, oh, no, it's not, 67.13 of the continuous contract. Let's just say that the low of whatever chart you're looking at, if it's a long-term continuous chart, the low of February of 2009, that particular low is really was the support level. Now it's become the resistance area. Let's get out of that. So I think I answered the question. Yes, I think we'll be going higher in the OIH. Let's just see what is Exxon doing. Maybe bouncing nicely today. It's bouncing. Okay, it's up 1. Yeah, it's a tough sell. I think Exxon has bounced material. Then it goes down to lower lows. Okay, now that's that. And then I also wanted to do this, and I'm just trying to find who it was for. Was it? Let's see. Just trying to find a name. I like to put a name with a question. All right, I'm not going to be able to because it was at the beginning of the weekend. I think it was, I might be wrong. I think it was Edna, if I'm not mistaken. Edna wanted to know about EFA. Well, actually, she didn't ask about the EFA. She asked about the EFI. But then I figured out that it was the EFA. It's the iShares EFI ETF, and this is really it's a mix of the European countries. What about it? And I'll come back. We'll talk about it as soon as I get back. And the Dow is up 109, S&P's up 13. Good action considering what could have happened this morning. A little bit of optimism there. Nice relief rally. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, folks, we're back. I'm looking at EFA trading at 66.11, up 91 cents, up 1.4%. That's a really big move. So I said I'd look at it on a purely technical basis, but there were many people that have just recently been talking about European stocks perhaps performing better than the domestic stocks, the American companies. I got a little nervous because I just heard too many people mentioning the same thing. But when I look at this, there has been such a good, I can't say a good pullback. I would say a good potential for a good pattern in the weekly chart that I was trying to find my CD introducing the Chapman methodology here. I've got it somewhere that I didn't pop up the way it should so that I won't be able to do this. But there's a pattern that I call the lower H case. And this is where the price comes down very sharply and then makes an arch formation and then retests the left side low. Then what you can expect that if it takes out that left side low but closes above it, it could rally, and it could rally to the previous most important peak. In this case, it was the peak of the week of the 26th of December at 62.35. If it takes it out, then you look at the next left side peak. But if there's a very positive divergence between the stochastic and the MACD, or if there is a signal that goes from a buy signal to a buy mode within whatever time frame you're looking at, that says that if it was to take out the left side high, in this case the high of 64.54, made week of the 28th of November and close above it, that would be very positive and suggest you could even go to the next left side peak. And that left side peak would be 67.47, made on the week of the 5th of November, 5th of September. So as it stands right now, all this needs to do, both on the daily chart to start a leg D to the upside, would be to break above 66.21, today's high so far, 66.13. Looks like it could do it by tomorrow if the market holds. Most importantly, what we're looking at is that the left side, right side price time match says that within the April period, and I haven't quite finished it. I meant to, I tried to, but I ran out of time. But there should be, I think it's about this, the third week of April. By the week of the 24th of April, there should be a test of the area between 66.81 and 67.47. So I hope that helps in some kind of, in some way of saying, yes, I think that the idea, I think I'd email back to say, I would not put a very big percentage, but I would certainly consider a smaller percentage. And even now at this price of 66.10, I would consider a small portion of your portfolio. Yes, I would still have a stop, even though it's a small portion. It's at 66.10. I think a 2.5 point stop towards the 64. That would be 1.5, 63.5 area. I think for now would be good. So part of a portfolio, yes. I think that there is a chance that Europe could, at least on the shorter term, could be favored. Question about a VGK, VG. I don't think I've ever done this before. GK. VGK is the Vanguard, FTSE. ETF, Vanguard FTSE ETF on what? Vanguard Europe. Okay, so that's gone in the monthly. It's gone A, B, C, D. 59. EF. It went to a peak F right there. Pulled back quite sharply. This is a bounce. It's the same kind of pattern. It's a monthly chart as a bounce, but the technicals are saying that the bounce could still go a little further in the monthly chart, but you've got to watch that. That's the one that's very important. And the weekly says we're in leg B. No, we're not. We're in leg C. So this is A, B. It'll be leg C if we're able to take out. Same sort of thing. 56.41 starts leg C in the weekly. And the daily has A, B, C, D, double top. A, B, C, D right there. Now it's made a brand new move, A, B, and that'll be C if it goes above 56.40. I like it. I think it's doing well. I would still put a stop in, but my thinking here is that probably it's not a bad assessment to say that there's a rotation going into the European stocks. Now, what about FXI? This is the one I was looking at during the weekend, and I said this is going to be an extension in leg D. If there's an extension in leg D and it's extremely strong, it says this is not the kind of D that says watch out because you're going to be coming back sharply. It says this could have a high-level consolidation. FXI is the iShares FTSE China 25 ETF, trading at 46.35, up 69 cents. Now, that 69 cents today is very important. Why? Because it gets the stochastic up to 95%. You know that when the stochastic starts to flatten out in the high 90s, 95 or so percent, 96, 97, that's a very good sign. It creates tremendous support for whatever stock you're watching. So this is good. Now, here's the thing that really fascinated me when I was looking at it this weekend. To be very conservative, I could say that maybe this is a G/B or C in the weekly chart. But the stochastic's at 84% and the MACD is good. The monthly chart is really, I know this is just the third or fourth trading session in April, but the way it's broken out and trying to tackle the 46.40 high, wasn't 46.40 the number we were looking at before in the VGK? Yeah. So here we go. This is the high that I'm looking at. April, the week of the 29th of April 2011, 46.40 was the high. Yep, today's high is 46.37. Isn't that interesting? And that says that I can draw this in and I can give you some sense of time, price match from here to here. That's not going to be good because that'll be a little late. So let me just show you what I would normally do. First thing I do, go to high points, right there. All right, so we're a month late, but that's not a problem. Just saying that it is accurate because this would be the target range right there. That's number one. Number two is I like to draw in what would be the resistance levels to that stage there, and you've got them. So I like it. I think that the FXI could pull back a little bit, but definitely money's flowing in, and that's going to be very interesting. Does money siphon off our market and go to overlapping waves? Whoops, I missed it. Overlapping waves, A, B, C. Oh, it could be thought of as an overlapping wave, but I made that a D. So yeah, now this is just going to be called an E for now, but it's the same concept because it's very powerful. Now, what we're looking at in the FXI, now let me just show you something. Did I lose an HK? So we go to Hong Kong, but I haven't got the Hong Kong index. I've got the, why is that flat? Are they closed for the holidays or something? So the monthly chart, it says it's trying to tackle the previous high. This is the Hong Kong index, the Dow Jones Hong Kong index. So the price is a little different, but the chart pattern should be very much the same. And what it's saying is, get rid of the capital lock, go back and call that a peak D, leg D. So we're in leg D in the weekly chart, and that's really important. Look at the powerful move that it's had from the high 490s to 526 where we're at. And that says that there's a tremendous amount of buying. And this buying looks like it's for real because the stochastic, oh my goodness, stochastic's at 99.39%. That's the equivalent of on the downside, seeing the stochastic go to, let's see, what was it at one point? It went to 3. Yeah, it went to 3. Let's see. 3.01, 2.52. So yeah, it's the exact opposite of what was on the downside. Look at that move to the upside. Very nice. Okay, so we've got a rotation through different sectors. We've got a rotation through different countries. Now, I have to respect when a market should be tanking and it actually rallies, and that's exactly what it's doing right now. And I have to put that into the pie and say, okay, in my opening call, we're in sectors, we're in stocks, we're also in stocks that are, and sectors that are not acting all that well today. In fact, 2 of them are still, 3 of them, at least 3 of them are making, 3 of them are giving us a nice profit, and 1 we got taken out, and 1 is down just a tad. 1 we're short. It's we were shorted at 79.30 or something like that, and it's at 79.94 right now. Okay, so I'm looking at this and I'm saying I'm correct about the rotation so far. Now let's see where the markets go. If at the end of the day, the market, the Dow is now up 124, S&P's up almost 15. Let us see whether or not, what happens to the dollar, what happens to gold. It's going to be really important. Let's go to Brenton Martinez. Whoa, we're talking about gold. Hi, Brent, how are you?
Good morning, Basil. How are you?
I'm well, thank you.
Very good. I was just going to quick note, let you know I did get out of some of my PBR. I had $6 calls for June. Then I bought at 70 cents, and I sold for $1.42. So
wonderful! That is terrific.
And I still have my $4 ones that I was talking about. But I was calling about.
I just want to say it's in leg C right now, so it's still acting very well. PBR we were talking about the other day, which is Petróleo Brasileiro, SA-ADS trading at 6.92, up 16 cents. And now you're looking at?
I'm also long silver and gold, so GLD in particular.
Right.
Look at that, please.
So this is going to be very interesting. I'll tell you why. The stochastics at 83%, and the MACD is still very good, and the histogram is still good. We're looking at GLD, Spider Gold Trust, trading at 117.15, up $1.87. Technically, with what happened on Friday, or what happened during the session with the futures, and then Sunday night into early Monday morning, the gold contract spiked, and the GLD opened at 117.32, yet it closed on Friday at 115, I think it was 40 or something, 115.28. So this is a pretty big move, but it's in leg D. However, when you're coming off lows, that's the one time that you do expect that you can go to a D and then recycle even higher. Now, the weekly chart made a peak C, pull back sharply. I could call that C minus, or I could just put in here a gray A to say it doesn't matter, whatever this is. Let's see whether or not we're about to get the arch formation that I've been talking about, that should be occurring in these commodity currency vehicles. And having made very sharp, crude oil as well, having made very sharp declines. And now this is not just a relief rally, this is the rally that says, phew, and now I've got a little breathing room. I can actually go up. I don't have to go very far, but I'm just off the bottom. I got to get off the bottom, and I want to stay off the bottom. And this might be one of those moves. So the GLD is acting quite well. If you look at some of the stocks, I'll just grab a few. Whoops, I better type it in the right place. So you're in it, and basically I'm going to say to you, let me just look at the dollar, and I want to explain something that's going on. The dollar has made the inverted pattern. It's the H pattern in the daily chart. In the weekly chart, it's got another little H pattern. And until the dollar closes below 96, in the 95.50s, 95.35 area, I just have to point out that the history, just as look at this. Chart patterns repeat, and the irony of the whole thing is they repeat whether or not they are connected. And if you're looking at the E-mini, you'll see that the 2030.50 to 2033 area was very strong support, and every time it's gotten down there, there's been a tremendous 4 or 5 times now, there's been a tremendous spring right off that like a trampoline. Well, we're going to be looking to see if in the next 3 days the dollar either takes out the 96 support, 96.17 actually, but let's call it 96, takes it out and pulls back into the 95.50s or lower area by this coming Friday, because the technicals are not very good in the daily. Weekly starting to deteriorate. Monthly still looks great. So that says to me, let's watch this real closely, because gold needs to have a follow through, and its leg D, it's worked very hard. The euro, EUR-USD currency pair hasn't made the leg D yet, which is very unusual. Maybe I'm a little bit behind, but that's what I'm looking at, that it has not screened to the upside. Let me just double check, 1.103, yeah, it should in fact be taking out the left side high of 1.10516 made on the 26th of March. I think it will, but it hasn't yet. And then we're going to see what happens, because after D, you could expect some kind of a pullback. You know, can you hold on? I just want to finish my thought, because I wanted to tie it into some of the gold stocks.
Yes, I will, Basil.
Thank you very much. We've got Brent holding, we've got the Dow up 125, S&P's up 14. Good action concerning what could have happened and what did happen last night. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. Basil Chapman, Dow's up 122. S&P's up 14.5. We're on with Brent in Martinez, California. We're looking at GLD. So Brent, what I'm going to suggest are two things here in terms of just handling the position that you have. If you're in at a good price, and I think you are, especially the, I think, was it the SLV that you got?
Yes.
Yeah, so what I'm going to suggest is just to watch it real closely, that if the dollar has some strength tomorrow, we could see, for instance, when I look at the gold stocks, like GG popped up and now it's more or less at the low of the session, but it is a gap. So far it's still up 0.58, which is very good. The weekly chart suggests that there's just a lot of work to be done before they can really sustain a good rally. And RGLD, which should be one of the better ones because it really works on, they have they get the royalties basically. So they have a small company, but they get a tremendous amount of the royalties. I'm looking at it, and it's really not saying to me that there's great strength here. And if I look at one of the smaller ones, well, I like to go to ASA. ASA is a South African it's like a fund. And it's up, yes, it's up 31 cents, up 3%, but it's still way under the previous high. And that suggests to me that unless something sustainable happens, that the dollar takes out that 95 area. If the dollar takes out 95, you're going to see gold move very nicely. So I don't want you to change your position. I just want to say that this is leg D, And subscribers in my service are still long, the equivalent of the GLD. And I would think that I'd like to have my foot in that door right now, because I think the dollar is under some pressure, and that's what the Fed is trying for. They're trying to manipulate more the dollar, I think, than yields. So that's all I wanted to say, that yes, just watch it a little carefully. You might want to take something off. You can always put it back, but I would still keep the core, at least for now, because we want to see if it handles peak D very well and then goes towards 118.44, the 200-period moving average. It's at 117 right now. That'll be really good in terms of making the next arch formation. So I hope that helps you.
Oh, absolutely, Basil. Great analysis. Thanks for tying in the currencies as well. I appreciate that. You just have a great day.
Thank you very much for calling. Always appreciate it. So this is what I want you to do, folks, just before we're about to hand it over to Larry. So I'm going to say to you, the VIX index is still very important. You can see why. Look, the VIX index is now at 1468, up a penny. It should not really be up a penny. It should be down about 10 to 15 cents at least. So there's something going on here that says it's holding okay. I don't want to fight markets. I just want to have clarity. So to me, it's clear that right at this particular point, there is some buying pressure in the market. It's a little bit more relief pressure. I'm not sure it's fresh buying. That's what I'm looking at. And the portfolio that we have for my subscribers, we've taken out at 2 positions today, small loss, but that's not the point. The point is that what I'm looking at is a situation that, fortunately, having identified some sectors and some stocks within sectors, we're still doing very well. And the one really, well, 2 long positions, but one in particular is really very nicely up. I have to look at this and say, this is portfolio management. It's a really critical period. But if you're looking at the markets, let me just go to the Dow chart, my usual thing that I show my subscribers. Look at this. This is an arch formation, making the second arch formation. And then all of a sudden, you've got this soft W, these 2 U-shaped patterns. And that's what I'm looking at here. And that says, hey, wait a minute, there could be another bounce. We're just going sideways in this rotational aspect with a high-level consolidation. So if the Dow takes out in the next 2 days 18,008, the high of the 30th of March, I have to respect that and say, whoa, this is much stronger than I expected. Still within a consolidation, we're trying to head towards the uptrack resistance. So thanks for being here. I'll be back tomorrow. Have a great day. Check out my opening call and stay tuned.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.